credit score. So if your FICO score is a 600 and you're probably thinking about where to get business funding, I got good news for you. Okay. First of all, let's understand what really matters when we have a 600 credit score. What matters is that you want to really pay attention to your relationship with an existing business lender, or you want to make sure that you have revenue. See, the whole thing is that if you're trying to really, let's say, deflect the focus of the whole transaction from your personal credit score to your business credit score, then you really want to put forward your EIN, right? And putting forward your EIN means that you have to really you have to highlight your business's potential. So revenue is actually an important element to actually highlight when it comes to looking at your whole paperwork. So if you have a 600 credit score right now, you may face higher interest rates. That's for sure, because some banks or credit unions might want to see you. I mean, they might see you, not might want to see you. They might see you as a bigger risk. Okay, so they'll charge you a double digits APR. So you'll probably have like 15% or 20%, and sometimes even 25%. So that's totally expected. Okay, and one thing you need to understand also is that when you have a 600 FICO score, fewer lenders will be willing to approve you. And one thing I want to tell you here is that if you have a 600 FICO score and you don't have an existing solid relationship with a bank or credit union, it's just better to look at loan marketplaces such as Lendio or NBC, National Business Capital, or you can actually go to online lenders like Blue Vine, or you can even try alternative capital like ROK Capital or ROK Financial. Okay, so the bottom line is you have to be strategic. If you have a FICO score of 600, you have to be strategic, and you also need to understand that sometimes those lenders might ask you to have strong supporting documents. That's what I was telling you a little earlier when I said you better have good revenue. Good revenue can be 10 grand a month, it can be 15 grand a month, it can be 25 grand a month at least. Okay, and so they might also ask you to have your business tax returns. So here we are speaking about your 1065, your 1120S or 1120. So bottom line is you better beef up your application paperwork to increase your chances of qualifying for a business loan if you have a 600 or about a 600 FICO score. Now let me talk to you about the types of funding you can still access. So if you're thinking about business funding with 600 credit score, again, you have to understand that the types of funding you can access may be limited depending on the lender you're looking at, right? So if you go to a bank or a credit union, the types of funding you might actually get will be limited because that's just because of their business model. I mean, banks by nature are more conservative than say alternative lenders. Okay, so I want to first talk to you about online lenders and fintech companies. So basically, if you have a 600 FICO score and you're looking for business funding, try online lenders. I told you a little earlier when I said Blue Vine. Those are good names. Those are names with a proven track record. They've been around for years now, and that tells you about their proven track record. Okay, I have reviewed on this show Blue Vine before, but there are other lenders such as Fundbox. I have reviewed Fundbox also. We have Credibly. I love Credibly personally because Credibly has terms and conditions for its business loans that are really, really good. And also they're good for established business owners, but also startup founders, okay? You have On Deck, and you have PayPal Working Capital. PayPal Working Capital is kind of cool if you have let's say an account, a business account or a regular account with PayPal, and you actually run some of your transactions through PayPal, okay? So the cool thing is that those companies like online lenders and fintech companies, they care more about your business revenue, your cash flow, and your time in business. Also, you want to think about merchant cash advances. This is another type of funding you can still access if you have a FICO score of 600, because again, merchant cash advances are revenue-based transactions, okay? And so those transactions are easier to qualify for regardless of your FICO score. So if you have a FICO score of 600 or 550 or even 300, you can still qualify as long as your revenue base, your sales are strong, okay? So first type, online lenders and fintech companies. Second type, merchant cash advances. If you have a FICO score of 600 and you're looking for a business funding, let me introduce you to another type of business funding model that you might find interesting, and that's invoice financing. So here again, we are talking about revenue-based financing. In other words, you are leveraging your existing assets, your existing accounts receivable to receive funding, all right? So you're really deflecting the focus from your personal FICO score to your EIN. That's what I said a little earlier. And because you are paying attention to your company's sales, basically lenders will are more likely to approve you, assuming that your company has a strong sales in the first place. Okay, so invoice financing is a great business funding model to really go for if you have a FICO score of 600 or even lower. So if your invoice clients, invoice financing lets you borrow against those unpaid invoices, because those unpaid invoices, they do represent your assets, your accounts receivable. And accounts receivable is a short-term asset on your balance sheet. So when lenders ask for your balance sheet, they'll analyze your balance sheet. They'll see that you have accounts receivable, and because those are assets, they can be used as collateral for a loan, right? So invoice financing is a type of collateralized loan. Okay. The only thing is, this is not a tangible. This is not a tangible asset, but it's still an asset anyway, because this is money that you're expecting to receive from your clients. Okay. So lenders care more about your customer's credit than yours. So again, the goal here is to deflect the focus from your personal credit score to your customer's credit score, to either to your EIN or something else. And in this case, you are speaking about your customer's credit scores. Okay. So now, if you invoice, let's say B2B customers, and you have 30 to 90-day invoice terms, you can use invoice financing to get funded. You can also try business credit cards. I mean, business credit cards is another type of business funding. If you have a credit score of 600 or even lower, okay, like if you take Capital One, if you take Discover, for instance. Those credit cards are pretty good. Okay, now Discover doesn't do business credit cards anymore, but you can use your individual credit card, your personal credit card, for business purposes. Of course, there is a limit. If you have a large company, you better go to Capital One, for instance, or even Chase, more established credit cards. Okay. Now, if you have a FICO score of 600 or below, basically, there are ways to strengthen your application without raising your credit score. Okay, because the whole thing is you want to have business. You want to be funded, right? So you have no time to actually work on your personal FICO score, because that would probably take 6 months or even 1 year for you to really see an increase of 100 points, for instance. Okay, so what you want to do here, I think I've said this before, but I want to say it again. The whole idea is to deflect the focus, deflect the priority from your personal FICO score to your business EIN. So if you have business credit right now, that's pretty good. I mean, if you have a business credit score, let's say you have a PayDesk score, or you have an Experian business score, or an Equifax business score, you're pretty good, right? The whole idea here is to make sure that you leverage what you currently have. So if you have a PayDesk score now, that's cool. Now, if you have to create from scratch a Dun & Bradstreet profile, or an Experian business profile, or an Equifax business profile, things can be a little complicated, but they're still possible. Possibilities are there, okay? One thing you want to do here is to show strong revenue. I think I've said this before, but I want to insist on that. So lenders actually want to see at least 10 grand a month in revenue. I'm speaking about average revenue. I mean, some months you might have 10 grand, some months you might have 20 grand, some months you might have 5 grand. As long as on revenue, over the last 12 months, you can show 10 grand in revenue, you are increasing your chances of being funded with a 600 FICO score. So revenue is the quintessential element to really pay attention to. You also want to use a business plan. If you have the possibility to create a business plan, that's kind of cool too. Now, I'm not asking you to really write a 100-page business plan. No, you don't need that. What you need is to have maybe a 5-page business plan or a 10-page business plan that's very solid, that talks about your business model and how you make money, right? See, the whole thing is you want to convince lenders that you make money, you can make money, and that your way of making money is actually a good way. It is a sustainable way. Okay. You also want to leverage collateral or co-signers whenever they're available. You also want to open a business bank account. That's what I said to you a little earlier, that you want to really focus also on leveraging your banking relationship. So you want to open a business bank account and you want to register your business properly. So when I said you want to leverage your EIN, you better have an EIN in the first place. So you got to contact the IRS to have an EIN, and the IRS will make sure that you use your EIN for like all kinds of purposes. Okay. And the EIN actually solidifies your business profile. Big time. Big time. Now, let me talk to you about funding options that don't require personal credit checks. If you're looking for a business funding with 600 credit score, you want to look at certain things, you want to look at certain business models that can really help you. And I've got three business models that you want to really think about. So besides the merchant cash advances, the invoice financing, and all those options that I spoke to you earlier, there are other options that can really help you also actually get business funded real fast, okay? The first thing is business grants. I mean, the grants are not loans, that's for sure. You might say, well, I need a loan. But hey, listen, why should you go for a loan if you have free money? If you have the possibility to get free money, go for it, right? It's all about free money, no repayment, okay? And so you have lots of outlets, lots of platforms online that can really help you get business grants in your area, in your niche. I've actually dedicated a full program to business grants, but if you want more guidance on that front, let me know in the comment section, and I'll certainly fill you in way more. Okay. So you have places like SBA.gov, you have grants.gov, you have Hello Alice, and you also have local nonprofit programs that actually are good outlets for information to business grants. You also want to have you want to take a look at crowdfunding. So we're speaking about Kickstarter, we're speaking about Indiegogo. Those are platforms that are great for you if you want to raise capital and raise capital from the public, right? Now, of course, you got to have a strong product, okay? Because when you do crowdfunding, nobody's checking your credit score, okay? You can also try the CDFIs, so the Community Development Financial Institutions. Those are really great platforms, great institutions. They are mission driven, and they help sometimes underserved entrepreneurs. So this is actually a great opportunity for you to actually get funded, okay? If you have a FICO score of a 600 or about that number. Now let me talk to you about, I want to give you a step-by-step plan to get funded to get business funded, your business funded with a 600 credit score. One thing you need to understand here is that it all starts at the way you organized your paperwork, right? But you want to start from the beginning. You want to check your credit reports. I mean, don't get me wrong. You have a 600 credit score, okay? Big question is, how are you sure that 600 is actually correct? Sometimes, you just want to dig a little bit and see if that 600 is not maybe a 650 or a 700. Because there are some errors that are crippling your credit score, and if you fix those errors, you can probably just get like a boost of 100 points or 50 points. Those things are really true. I mean, when you think about the way Experian, Equifax, or TransUnion are structured, if you are able to fix some errors, you could actually bump your credit score real fast. So it's always good to check your credit reports as the very first step. If you want to get business funded with a 600 credit score, or even let's say even 650, right? Check your credit reports. And number two, you want to organize your financials. Financials are really important because you want to really deflect. I think I've said this throughout this conversation. You want to deflect attention from your personal credit score to your business EIN. And yeah, and it's just a number, but the way you actually solidify this number is by having solid financials. I'm speaking about you making sure that your balance sheet is ready, your profit and loss is ready, your income statement is ready, and your cash flow statements is ready. Now, there are some banks and credit unions that like to see a fourth financial statement called your statement of owner's equity. Okay, because they want to know who is behind the business in terms of equity. So when I say financials, I'm speaking about, of course, the three or four primary financial statements. But you also want to think about your bank statements, okay? Your business bank statements. And here, lenders might want to see, let's say, 3 months or even 6 months of activity, right? It's all about seeing the cash flow that you have within your business bank account. That's what I said to you earlier. To open a business bank account, you have to really run every transaction through that business bank account. Okay, if you have a personal bank account and you want to use it for business purposes, that really defeats the whole purpose of getting EIN funding. You also want to research lenders that accept 600 range scores. Okay, and you can apply to 2 or 3 at most to avoid hard pull overload. And I think I told you a little earlier, right? Those lenders that accept like 600 range scores, online lenders, online loan marketplaces, alternative lenders, fintechs, and so on and so forth. Fintechs such as OnDeck or Blue Vine or Fundbox and so on and so forth. So that's the third step. Research lenders that accept 600 credits, 600 range scores. The next thing you want to do is you want to consider secured or revenue-based options, right? I've said this before. I mean, if you have collateral, let's say you have tangible assets, and you are in a position where you can pledge those assets, those tangible assets, let's say as security for a loan. Go ahead and do it. You know why? Because collateralized loans are usually cheaper in terms of APR, in terms of terms and conditions, and you might also have a good repayment window. Like a lender might want to give you 6 years or 10 years instead of 5 years because you collateralize the loan, right? Because when you collateralize a loan, you're basically reducing the risk of default. The lender is looking at you as a better risk, as a lower default risk. Okay, so that's kind of cool. So if you are able to pledge some assets, go ahead and do it. The revenue-based option, I've said this before, right? So accounts receivable financing, merchant cash advances, invoice factoring, or invoice financing, anything that is based on your sales, go ahead and do it. And finally, you want to apply and follow up, okay? You want to be responsive throughout the application process, but most importantly, you want to be honest. Don't fudge numbers, don't lie on your business application because it's wrong and it could be also grounds for a lawsuit. So you do not want to have that, right? So it's just like, why would you lie to get the business loan? I mean, you do not want to do that, or even getting a loan in general, right? So you want to focus on lenders that value cash flow. You want to explore non-traditional financing. This is how you increase your chances of being approved. And you want to keep building your business credit profile. So you want to make sure that you actually reach out to vendors that actually will report your data to Dun & Bradstreet on a consistent basis, to Experian Business on a consistent basis, and to Equifax Business on a consistent basis. That's how you actually, by having your data being sent to the bureaus, to the business credit bureaus on a consistent basis, this is how you are going to build your business credit real fast. So in conclusion to this conversation, I walked you through the step-by-step that you need to have if you want to get business funding with a 600 credit score. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.